Imagine this: your neighbor, that uncle who used to laugh at people buying silver, he just made 80% returns in less than 2 years. And now everyone around you is asking the same question: should I buy silver right now before it explodes again? But here's the thing nobody tells you: silver has also crashed 70% before in months. So is this your golden opportunity? Or are you about to walk straight into a trap? Stay with me, because by the end of this video, you will know exactly what to do based on logic, not emotion. In India, we love gold. Gold is in our blood, gold is in our culture, gold is in every wedding, every festival, every savings box under the bed. But silver? Silver is that confusing cousin nobody knows how to talk about. Sometimes it behaves like gold, safe, slow, steady. Sometimes it behaves like a small cap stock, wild, unpredictable, brutal. And right now, with inflation everywhere, global tensions rising, and the stock market making people nervous, a lot of Indian investors are suddenly asking, should silver be in my portfolio? Let's break this down step by step, no jargon, just clarity. Is silver expensive right now? First, let me ask you something. When silver hits $50 per ounce, most people panic and say, it's too expensive. I missed it. But that thinking is wrong. Here's why: $50 today is not the same as $50 in 2011. Inflation erodes money's value every single year. So let's put this in real terms. The 2011 silver peak, adjusted for inflation today, that's roughly $75 per ounce. Silver hasn't even come close. The 1980 silver peak, that's nearly $200 per ounce in today's money. Let that sink in. Now, here's another way to look at it. We also compare silver to something called money supply. Basically, how much money governments have printed. After COVID, the US Federal Reserve printed trillions of dollars. Trillions. And whenever that happens, hard assets like gold and silver go up. But here's the key number for you. In 1980, silver was rising 10 times faster than money supply growth. That was a super bubble. In 2011, silver rose 1.7 times faster, still stretched. Today, silver is only at about zero point 0.6 times relative to money expansion. What does that mean for you as a beginner? It means, from a macro standpoint, silver does not look like a historic bubble right now. This does not mean prices can't fall. They absolutely can. But we are not in crazy bubble territory. If this is useful, smash that like button right now. It helps more Indian investors like you find this video. The secret tool most beginners don't know. Now I want to teach you something that most beginner investors have never heard of. It's called the gold silver ratio, and it's one of the simplest ways to know if silver is cheap or expensive relative to gold. Here's how it works. The ratio tells you how many ounces of silver does it take to buy 1 ounce of gold. Historically, the average is around 60 to 70 times, meaning 60 to 70 ounces of silver equals 1 ounce of gold. That means silver is still cheap compared to gold, historically speaking. When this ratio drops back towards 60, silver outperforms gold. Big time. This doesn't guarantee anything, but it's a useful signal that smart investors watch closely. And now you know it too. Why silver is different from gold. The industrial secret. Here's something that will completely change how you look at silver. Gold is mostly a monetary metal. People hoard it, central banks store it, Indians buy it at weddings, but silver? Silver is increasingly becoming an industrial metal. Around 65 to 70% of global silver demand comes from industry, not jewelry, not savings, industry. Think about this. Every solar panel uses silver. India is building solar farms across the country right now. Every electric vehicle uses silver. EV adoption is accelerating globally. Every smartphone, every semiconductor, silver is inside it. Now, here's the supply side. Global silver demand is around 1.2 billion ounces per year. Global silver supply, only about 1 billion ounces. That's a structural deficit of 100 to 200 million ounces every single year. And this deficit has continued for multiple years in a row. Demand is growing, supply is limited. That's a fundamental tailwind. You can argue about timing, you cannot argue about this trend. The part most YouTubers won't tell you. Okay, now I need to be very honest with you because I'm not here to hype you into buying silver blindly. Silver is brutally volatile, and beginners often don't understand what that really means. Let me give you real numbers. When gold rises 10%, silver typically rises 20 to 25%. Amazing on the way up. But when gold falls 10%, silver can crash 30 to 40%. And in major corrections, silver has fallen 50, 60, even 70% within just a few months. Think about that for a second. If you put 10 lakhs rupees into silver tomorrow, it could become 3 lakhs rupees before it ever recovers. Can you sleep at night with that? Can you hold without panic selling? If the answer is no, then your allocation should be smaller. That's not weakness, that's wisdom. Think of silver like this: gold is a large cap defensive stock, silver is a mid cap cyclical. More upside, more downside. Can silver replace gold in your portfolio? A lot of beginners ask me, should I just swap my gold for silver? Please, don't do that. Let me explain why. Gold plays a defensive role in a portfolio. It protects you when markets crash. It reduces your overall risk. Silver does not do that reliably. It's too volatile. It's too correlated with industrial cycles. In a proper portfolio, silver belongs in the growth bucket, alongside equities, small caps, crypto if you're into that. Not in the defensive bucket alongside FT, PPF, government bonds. And here's something specific to Indian investors. Most Indian households already hold physical gold in jewelry, in lockers, passed down from parents and grandparents. You probably already have gold exposure without even realizing it. Adding silver is adding more growth risk, not diversification. Understand that difference. The practical problem. Nobody talks about quick but important point about physical silver. Silver is much cheaper per gram than gold. That sounds great. But here's the problem. 50 lakh rupees worth of silver weighs approximately 30 kilograms. Where are you going to put 30 kilograms of silver? Home locker, risk of theft, bank locker, limited availability, high cost. Many banks won't even allow it. This is why many smart investors use silver ETFs or sovereign silver instruments instead of physical storage. You get the same price exposure without the headache of actually storing metal. No storage fees, no security concerns, easy to buy and sell on your phone. What about taxes? This section adds massive value for Indian beginners. Go slow. Nobody likes talking about taxes, but as an investor, you must understand this. If you buy a silver ETF and sell it after 3 years, you pay long term capital gains, LTCG tax. currently taxed at your income slab rate. If you sell before 3 years, that's short term capital gains STCG also taxed at your income slab rate. For physical silver, it's similar. Held over 3 years qualifies for LTCG with indexation benefit, which can reduce your tax significantly. Tax pro tip: if you're investing for the long term, silver ETFs give you clean records and no storage hassle. Much easier at tax time. Note: always consult a qualified CA for your specific situation. Tax rules change and individual circumstances vary. How should you actually invest? Step by step. Most important section for beginners: slow, clear, confident. For short term traders, if you want to trade silver on MCX futures or silver ETFs on a shorter horizon, this is a different game. You need technical analysis skills. You need stop losses. You need risk management. You cannot buy on emotion. You cannot chase breakouts without a plan. If you don't have those skills yet, don't trade silver short term. Seriously. For long term investors, that's most of you. For long term investing, stop obsessing over entry timing. You will never perfectly buy the bottom. No one does. Instead, ask yourself three questions. Question 1: is silver cheap or expensive relative to gold right now? Check the gold silver ratio. Question 2: is silver cheap or expensive relative to inflation? It still is, historically. Question 3: is silver cheap or expensive relative to money supply growth? Still below historic peaks. If the answers suggest reasonable valuation, then invest. Don't wait for the perfect candle on a chart. How much should you allocate? For most beginners, between 5% to 10% of your total portfolio into silver is reasonable. Not 30%, not 50%, 5 to 10% inside your growth allocation. If you're very conservative, even 3% is fine. The goal is exposure, not obsession. And use systematic investment plan SIP style buying. Invest a fixed amount every month. This averages out your entry price automatically. No stress, no timing pressure. So, is this opportunity or risk? Let me give you my honest take. Do I see a structural opportunity in silver? Yes, absolutely. The supply deficit is real, the industrial demand is real, the gold silver ratio still favors silver. Is there also significant risk? Also, yes. We are already 30 plus months into this silver upcycle. Commodity cycles typically last 5 to 10 years, but corrections within those cycles are normal and brutal. A 30 to 40% correction from current levels would not be unusual. It would not be the end of the world, but it would test you. The answer is opportunity and risk. Both exist simultaneously. Your job is to size your position accordingly. Your action plan: 5 things to do this week. Fast, punchy, energetic. Recap mode. On screen text cards for each point. Number 1: know which investor you are, long term or short term. Don't mix both mindsets. Number 2: check the gold silver ratio today. If it's above 80, silver is historically cheap relative to gold. Number 3: cap your silver at 5 to 10% of your total portfolio. Never more unless you really know what you're doing. Number 4: consider silver ETF over physical silver. Easier storage, easier taxes, easier life. Number 5: Start an SIP, fixed monthly amount. Don't time the market. Let time do the work. And the most important rule of all, never invest money you can't afford to lose. Silver can fall hard. Invest with money you won't need for at least 3 to 5 years. Closing the wealth truth back to high energy, direct eye contact, slow down on the final lines. Here's the truth about building wealth that nobody teaches you in school. The people who win are not the ones who find the hottest asset. The people who win are the ones who build the right allocation and have the discipline to hold it. Gold, silver, equities, bonds, a good mix. Not all eggs in one shiny metal. Silver is not a lottery ticket, and it's not a guaranteed safe haven. It's a tool. Learn to use it right. If this video gave you clarity, and I believe it did, do me one favor. Subscribe to this channel because here we don't chase hype, we build knowledge. And in investing, knowledge is the only real edge. See you in the next one.